Hello there. Welcome to iSectors' fourth quarter 2024 CryptoBlock Model video review. My name is John Koch, iSectors' Chief Investment Officer, and I am joined by the CEO of iSectors, Vern Sumnicht. Today, we'll go through a quick rundown of our CryptoBlock Allocation Model and how it performed in 2024, along with a look at the broad crypto market as we see it here in early 2025. So 2024 was a very good year for the iSectors crypto block allocation. It was powered mostly by Bitcoin. Our model there in blue is shown. It outperformed the S&P 500, its blockchain benchmark, and broad technology as represented by the S&P North American Technology Index. CryptoBlock is a 100% ETF-based crypto model. As you can see, it has a nearly 60% weighting to Bitcoin, alongside blockchain equity exposure and a very small amount of Ethereum. And it's that small amount of Ethereum versus the large amount of Bitcoin that we want to talk about a little bit more today. We've been on a lot of calls recently with advisors, and we've watched numerous webinars where an advisor will submit a question and ask an asset manager or an ETF issuer, how should they invest in the newly issued Bitcoin and Ethereum spot ETFs that were launched in 2024? And it seems almost every time the asset manager will suggest, if an advisor doesn't know what they're doing, just do 50-50, do half in Bitcoin, half in Ethereum, and that'll cover all their bases. But we don't really agree with that. We don't think that's correct. First of all, the Bitcoin market dwarfs the Ethereum market, which you can see represented here as at one point in that argument, Bitcoin dwarfing the Ethereum volume as far as futures trading goes on the CME futures markets. And not only in trading volume, but just the overall market cap of Bitcoin dwarfs the market cap of Ethereum. Shown here, you can see the Bitcoin market cap as of the end of the year was about $1.8 trillion. Since then, it's actually gone over $2 trillion as the price of Bitcoin has gone back over 100,000. So if you were to utilize a market cap weighted strategy, Bitcoin would have about a 5 times higher weighting than Ethereum would. If you were to invest 50-50 in Bitcoin and Ethereum, it would be a very disproportionate overweighting to Ethereum compared to Bitcoin. And now, us, on the other hand, at iSectors, within our model, especially, we're on the other side of the coin, on the opposite end of the spectrum. We purposely and consciously have a heavy overweight to Bitcoin against Ethereum, and there are a few reasons for that, and we'll get into those on the next few slides here. First of all, Bitcoin is a deflationary asset. There's a hard cap of 21 million coins that will ever exist. And as we get closer to that cap, as more Bitcoin are mined, the pace of new supply that enters the market falls, as you can see here shown in the black line and the red line. The black line is the pace of Bitcoin that are mined, and then the red line is the inflation rate of Bitcoin itself. So you can, as you can see here, we are nearly 100% minted on the amount of Bitcoin available of the 21 million. And as that happens, as we get closer to the end, the inflation rate of Bitcoin itself has dropped. And this is due to the mining mechanism of Bitcoin and the halving cycle it goes through every 4 years or so, where programmatically the amount of new Bitcoin that are mined and enter the new supply is cut in half. Now, in this halving cycle, as we call it, it drives a lot of the return of Bitcoin because it's all based on supply and demand. And that halving cycle controls the supply. And so you can see here, since the inception, these have been the 4-year cycles of the halving of Bitcoin. The halving has occurred in 2012, 2016, 2020, and then it just occurred last year in 2024. The year before a halving and the year of a halving have always had pretty strong returns, but it's really been the year after the halving, which will be 2025, that has historically apart from 2021, had the strongest returns. And so if this cycle holds again, and there's no guarantee that it will, of course, it's only happened 3 other times before now. If this cycle holds again, we're looking at another strong year for Bitcoin in 2025 on top of the 2 strong years it's had in 2023 and 2024.
John, it might be.
Yep.
Sorry.
Go ahead.
It might be important to note that a lot of people ask us, right? Is now a good time to buy Bitcoin? Man, it's $100,000, and we would argue that it's a great time to buy Bitcoin. It's probably the lowest risk from the standpoint that we don't have government interference here. We've actually got government cooperation, especially now that Trump has been elected and put in place a very crypto-friendly administration across the board. So we don't have the fear of the U.S. or anybody saying not that the U.S. actually could stop Bitcoin, but we don't have the fear of them interfering or trying to stop Bitcoin. They're going to be pro-Bitcoin. Trump's even talking about a Bitcoin strategic reserve where the U.S. government will be buying Bitcoin to place into a strategic reserve. So the risk of buying Bitcoin is a lot less than it was, back in, I started buying in 2017. The risk was very high then. You had China, you had everybody on the planet complaining and trying to stop Bitcoin and et cetera. 2021 was still a lot of questions. Obviously, the Biden administration was very anti-Bitcoin, and they had senators and congressmen, et cetera, that were anti-Bitcoin and fighting it. We don't have that now. Plus, now we have a lot of companies that own Bitcoin, and we have a lot of countries that own Bitcoin. So it's a very safe time, number one. Number two, you'll notice these big corrections, right? Go back again one more time, John. Sure. We have a lot of corrections, and people talk about, wow, we have these big corrections in Bitcoin, but notice they only happen after 2014, 58% correction after it went up 5,500% the year before. In 2018, we had a 74% correction, but that was only after it went up 1,349% the year before. So these big corrections, do come, but they typically come after pretty radical run-ups in Bitcoin, after some real excitement and maybe overbuying of Bitcoin at the time, then we could get it. But right now, based on, the historical movement of Bitcoin and where Bitcoin's at, it's very likely that 2025 will be a great year for Bitcoin. You want to buy it at 100,000, and we'll see how high it goes. If it gets overextended, then maybe 2026 will have a correction, but not now. And this is probably one of the best opportunities to buy Bitcoin. So at $100,000, trust me, 10 years from now, you're going to have friends that go, well, yeah, you were lucky. You bought it at $100,000 of Bitcoin, which, by the way, is another issue. You don't have to buy $100,000 to buy Bitcoin, right? By using the ETFs, you can buy $10. You can put $10 in an ETF and own Bitcoin. You can put 100, 300, 500, 1,000, 10,000. You don't have to buy $100,000 worth of Bitcoin to be involved in Bitcoin. Okay. It's an important point, and a lot of people ask about that. So this is a good time, and you don't have to invest 100,000. People say, well, is it risky to buy Bitcoin? It may be substantially more risky not to buy Bitcoin. Anyway, let's move. Move on.
Yeah, sure. Yeah, the drawdowns are not to be feared as long as you have held Bitcoin before the drawdowns and you continue to hold through the drawdowns, sure. And there's a very good chance it'll come bouncing back. Mm-hmm. You mentioned the companies that own Bitcoin. The crypto-friendly administration has sort of spurred a lot of firms to start buying Bitcoin as part of their treasury. The most notable might be MicroStrategy. They've sort of adopted a Bitcoin treasury model, right, where a large portion of their market cap is represented by Bitcoin. But there are other companies buying too: BlackRock, Tesla, Block, formerly known as Square. It's not only the crypto miners and the crypto native companies that are buying Bitcoin. There are large companies that are starting to buy in, and also countries are buying in. Here, the United States is the largest holder of Bitcoin right now. China, we know, has been buying Bitcoin. And so El Salvador, they accept it as legal tender. They're on here. As the demand for Bitcoin continues to increase, more companies buy in, more countries buy in, large institutions buy in. With this crypto-friendly administration we have, as we talked about before, demand increasing with supply remaining constant, there's really only one way for the price to go. And so that's really why we prefer Bitcoin so much more to Ethereum right now. There's so many other aspects of Ethereum that make it different than Bitcoin. It doesn't have all of these issues going for it like Bitcoin does. So
This
if you have any
demand, right?
yeah,
This demand that's back there is another reason why now's a great time to buy Bitcoin. Never in
yeah,
the past have we seen any kind of a period where such huge demand. John's got listed, of 13, 14 companies there on his
yeah,
slide
on the
that
previous
own
one.
Bitcoin. But note there's like over 50 companies that own Bitcoin in their treasury, and that seems to be growing every day. So MicroStrategy has really led the way, but this is an ongoing trend in demand. This doesn't include hedge funds. John's talking about the countries and the companies, but doesn't include all the hedge funds, the pension funds, doesn't include all the endowment funds, doesn't include. I mean, the demand for Bitcoin is huge, and the supply, as John pointed out, is extremely limited. And when there's a huge demand and limited supply, that's another reason why we believe now's a good time to buy it. Price is going up. So, thanks, John. This was a good summary.
Absolutely. Yep. If you have any other questions about the model, about our view on Bitcoin and crypto in general, don't hesitate to contact us. My contact information, as well as our Director of Business Development. And be sure to inspect the disclosure page before you go. Thanks. Have a great day.